This is Eric Muathe with Muathe.com with another quick educational video. This time we're going to be taking a look at the dollar chart to see whether it can help us understand a setup that I explain every now and then that can lead to sharp moves. So the dollar is up slightly today, July 12th, 2021. All right, so to begin with here, let's take a look at the setup that I'm going to be discussing here. For those of you who are not familiar with this setup, you're going to find information about this setup in the description of the video. This is going to allow us some time to look at the chart for the dollar quickly. And if you want more information, take a look. There are going to be some links in the description of the video to further explain this method. This is a playlist, so it's going to have lots of videos, short videos, so you can understand the concept. All right, let's go on to the dollar chart. So we can see this is a UUP, the ETF that tracks the dollar chart or the dollar index. And based on the concept, which is the Muathe Virgin breakout, we can see here that we have flattening out moving averages, this being a flat 200-day moving average. And it's recently coiled up also. And we can say net, the 50-day is doing its best to go flat. Now, the method plays on the following concept, that if there's going to be a crossover between the moving averages, this crossover can only take place if and only if prices can see a sharp rise. In other words, the only way to influence the moving averages higher is by a rapid price sustained expansion. So, if we take a look at the dollar index proper, we can see that if it can clear, now you can see here flattening out 50-day moving average, and we have a flattening out 200-day moving average that has recently turned up or is facing upwards now. Remember, all of these moving averages had been facing down for many weeks, if not many months. So, if there's going to be a crossover between the 50-day and the 200-day moving average, then we must see a price breakout, which is where now the timing comes in. In other words, if the dollar can clear the recent daily closing high, and that, let me give you that number for the dollar. It is the recent daily closing high from the month of July 2021, 62.64. So if it can clear that level, a breakout above this price level would suggest that there is a probability, of course we never really know, but there's a probability that there is an impending powerful crossover between the 50-day and the 200-day moving average. If there's going to be a breakout, and if there's going to be a future crossover between the moving averages, the only way that this can take place, in other words, the only way we get a future crossover of a bullish kind would be with a daily breakout above the recent daily closing highs while we were forming this flattening out moving averages. So in the future, should you see a breakout above this range for the dollar, and also from an educational standpoint, observe what happens, because if the breakout is successful, then we are going to see a sharp rise in the short term in the dollar, day to day, lasting a couple days, maybe even a couple week or two, maybe even longer if there's a breakout. At the same time, we also need to understand the consequences of a failed breakout. And we have a good example here where we see a breakout that lasts for a couple of days that was successful, but ultimately this breakout fails. And of course, we know that failed breakouts are notorious for taking instruments lower. And to sum it up, in this video, we're taking a look at how to take advantage of potential momentum areas in any instrument by way of the Muathe Virgin Breakout. More information in the links that are provided in the description of this video. And so it is. E-A-C-S. Eric Muathe with Muathe.com. Love light, light love. Namaste.